On today's episode of the Cryptoverse, why Bitcoin's price is on the path of no return. Dash is the privacy-focused digital currency that offers transactions with instant confirmations. Its unique, decentralized decision-making and self-funding system make it an ideal choice as a stable and secure digital cash. Click the link in the video description to learn more. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. I am your host, Chris Coney. So let's get into today's news. Today we turn to the Cointelegraph, cointelegraph.com. This article is a couple of days old. It's from the 30th of October, but there's been so much news, as there is most days, I have to select very carefully. So the article on the CoinDesk here says, well, it's entitled Bitcoin Price on the Path of No Return, with yuan, hodling, and institutionalization being the factors. So let's see what we've got. So it begins by saying, yes, the weakening of the yuan is responsible for the rise in the price of Bitcoin. Now, what I read into that is that Chinese people will be buying Bitcoin in order to protect their purchasing power from it eroding, which is the natural result of the national currency weakening, right? So then the article goes on to say, but what about some other factors that have been playing complementary roles to push the top of the digital currency's price to a level that is far higher than we have experienced in previous years? So economics and economies are like organisms, yeah? They're always in flux because they're being acted on by forces from all angles. And all the forces are independently doing their own thing, but sometimes we see a flashpoint, like if the Bitcoin price jumps 10% in a day or something, and we tend to want to know what the single reason for it was, when most of the time there isn't one reason. We want to know what's the singular force that pushed that price up. Well, there's, like I said, there's all these forces acting on it, and unless there's one extraordinary force, it's usually a confluence of factors that come together. So what normally happens is that a collection of these forces just happen to come together at the same time. And while they are all together, they are exerting force in the same direction temporarily. Now, then that structure eventually dissolves as those various forces continue to flow independently. But for the time when they are all in harmony, that's where they are pushing in the same direction and there's enough force to cause a spike of some kind. So the next bit of the article talks more specifically about the prices. It says, Bitcoin's price has gone up over $100 in a month from about $605 as at September the 30th, up to $705 by the 28th of October. And that's at the time of this publication. And it says there's been a growing volume of daily Bitcoin transactions. Okay, so we've found one of those bits of information again, which we need to verify for ourselves. So let's verify this by going to Bitcoin Wisdom. So it says here that the price was $605 at the end of September, and then it went up to $705 by the end of October. So bitcoinwisdom.com, here I'm putting my crosshair, if you can see this on YouTube, the 30th of the 9th. That day, the price closed out at $608, according to Bitcoin Wisdom. Now, this is according to Bitstamp's price, so it's a particular exchange that's feeding that price. So that might explain the discrepancy between what the article says at 605 and what I've just seen here at 608. So it says it goes up to 605 by the end of October. So if I move over to, let's say yesterday, or the 31st. Let's see what happened yesterday. The 31st is technically the last day of the month. The closing price on the 31st of October was $697, as opposed to the previous 2 days previous, which was $711. And then today, literally as I look at it here, today's bar has shot up again Today's gain overall is 3.49%. That's on today's candlestick. And it's currently sitting at $721, according to Bitstamp anyway. It's slightly different on BTCE. And I actually honestly don't know why there's that discrepancy. I think some people in the past have said because some exchanges have withdrawal fees and that's what discourages people and so on. It makes sense anyway, because if those discrepancies get cancelled out pretty quickly, because you could just buy the currency for one exchange and sell it on another one for a profit, and that's what keeps the price roughly the same on all the exchanges. So the bit about the price movement's pretty accurate, and then the second part that talked about the volume of transactions, I'm not so sure about. So let's flick over here to blockchain.info. I mean, that's a good name, right? It's an online hosted wallet, but at the same time, it does provide a lot of blockchain info, according to the Bitcoin network anyway. This is a 6-month view of the average number of transactions per Bitcoin block. And this is transactions on the network itself. It's not the number of people buying and selling Bitcoins. So here, it looks pretty flat, right? If we could draw a trend line, you can see the spikes, as in the peaks. Yeah, the peaks are gradually getting higher. And even most recently, like on the 20th of October and the 27th, there was they peaked over 2,000 transactions in a day. I think that's a day. Yeah, I think it's daily. So there's sort of a general slow trend of the increasing number of transactions, but it's not stark by any means. So if you want to look at that for yourself, go to blockchain.info, click on charts, and then this one I'm looking at is average number of transactions per block. And there's all kinds of other things that you can read on there in terms of charts and whatnot. So let's move on to the green bit. The article continues on Cointelegraph by saying, it may be too early to say, but the price of Bitcoin has been following a growing trend that has difficulty in reversing back to its original lowest price since its takeoff. So the author is covering their ass a bit there, but it's never too early to give your opinion because it's up to the readers whether they want to listen to it or not. But here's an analogy as to why I believe Bitcoin's continually failing to crash very far before it rebounds, or it can only crash so far. I think it's because of adoption. That's the thing that's preventing Bitcoin's price from falling too far before it resumes its upward move. So imagine a stairway, and this stairway is only wide enough for people to walk up in single file. But the stairway itself goes from the ground all the way to the moon. So on this staircase, if you're the first one on this staircase, then you can go up a few steps and then come back down again. You can go halfway up the staircase and then come all the way back down whenever you want. It's completely your staircase. So that, to me, would represent Bitcoin with zero adoption because no one else is trying to use this staircase. Now let's say you go part way up the staircase, and when you decide to come back down, when you reach the bottom 5 steps are occupied by 5 new people, and they're just stood there, one on each step. So meaning now the lowest you can go is the 6th step up, and you can't actually get off, right? Because there's those 5 people in your way. So you can keep going up and down the staircase as long as you want, but as long as 5 people remain at the bottom, you can't go any lower than the 6th step. So Bitcoin adoption then is the process of continually adding more and more people to that staircase. It creates an ever-increasing baseline that you can't go below. And that's specifically because people are using it and they have no interest in selling it, which would be someone stepping off the staircase, if someone wanted to sell it. Now, that's a very loose analogy, but it serves to illustrate the benefits of greater adoption and how that is the key factor in supporting the price. So moving on here, under the heading of the weakening yuan, the article says that the nation's exports unexpectedly shrank the most in 7 months in September, according to official data. This is in addition to the People's Bank of China weakening its exchange rate 4.4% in 3 days back in August of 2015. And of course, China's been famously doing this for years and years and years and years and years. The reason they want to depress their currency's value is to maintain their, it's not a monopoly, but their leadership in exporting, because most manufacturing moves to China, a vast majority of it's moved to China, and that's because if they can keep their currency price down, it makes Chinese goods cheap, and it makes Chinese prices low, if you want to call it that. And one strategy to depress the price of your currency is to print more, because it reduces scarcity, right? And of course, the bad thing about that is that the average citizen with money in the bank is eroding their purchasing power. So the weakening yuan, that's going to cause capital flight. It's going to cause the citizens to go, oh my God, my purchasing power is eroding. What am I going to do? And they might buy gold, or they might buy just something that is a non-yuan asset, something that has a more stable and less manipulatable value, like Bitcoin or like gold. You can manipulate the value in the market, but it's not arbitrary. It's not like a government or a central bank can just arbitrarily decide to create more of that currency and erode your purchasing power. There's much greater certainty around Bitcoin and gold in terms of how much new assets are created on a yearly basis. Anyway, enough of that. Let's move on to this next heading that says, a reduced supply factor. The article says that hodling, or holding on to, the top digital currency, seems to be having a strengthening effect on the value and price of Bitcoin. This trend seems to take Bitcoin off the market, reduces the supply available to everyone else, and increases the price as a result. It could also mean signaling to whoever heeds that one values the asset enough to want to hold it, which in its own interpretation could warrant keen interests from those who are yet to get into it. And with regards to the reduction in supply, references are being made to the earlier anticipated block reward halving that effects are now manifesting. The shortage in supply makes new buyers appreciate what they have, thus sustaining an increased value. So there's 3 items there actually. One is people holding Bitcoin reduces the number of Bitcoins freely moving around, which obviously compresses demand for the remaining coins. 2, social proof. If people find out that an increasing number of people that they know are storing some of their wealth in Bitcoin, that'll have a significant influence on them. And it may very well overcome their skepticism or whatever rubbish they hear on the news about Bitcoin being for illegal activity or whatever. And 3, the block reward halving means that instead of 25 new Bitcoins being created every 10 minutes, that was prior to July of this year, now we only have 12.5 new Bitcoins being created every 10 minutes. And I expected there to be a lag in between the halving actually happening and the effects appearing in the markets. So the halving is one of those forces that I was talking about earlier, which is it's busy acting on the Bitcoin price on its own, but sometimes it comes into alignment with these other forces. And of course, the more of these factors come into alignment at the same time, the greater the effect. So let's finish off finally with this grey paragraph, which sort of ties into what I was just saying about social proof. The heading is Greater Legitimacy in Public View. It says, independent institutions are sticking to the game. South Korea is putting measures in place for the spread of the top digital currency in the Asian country, which is home to some of the world's top Bitcoin exchanges, including Corebit, CoinOne, and CoinPlug. The government plans to develop and implement the blockchain technology in the financial sector within the next year and institutionalize Bitcoin to operate better in the future financial ecosystem. This form of government involvement, which is a form of legitimacy before the public eye, will encourage more activities in the fintech sector, and its impact is likely to resonate across other sectors as well. So have you ever heard the phrase brain over brawn, or brains over brawn? It means that you can use intelligence and strategy to defeat physical force. Now, what that makes me think is, with America currently bombing 7 different countries around the world, I would put their government squarely on the brawn side. I also wouldn't say that the American government are exactly embracing Bitcoin with open arms. These countries, on the other hand, are on the brains side. So these are the countries like South Korea and Switzerland, who obviously can't beat America at the war game, and neither do they want to, because they're probably smart enough to know that that is the dumbest thing in the world. So instead, they can make moves like this to sort of position themselves as significant players in crypto. Now, what's smart about this is that they can see the direction that the people are already moving in. They see the natural trend towards cryptocurrencies, and all they're doing is simply positioning themselves ahead of the wave, so that with no force whatsoever, when the adoption of cryptocurrencies explodes, they'll be right there ready to receive everybody with open arms. So thanks for joining me today, guys. If you dislike this episode, hit the dislike button. If you liked it, hit the like button, leave me a comment below with some feedback, and get subscribed. Or even consider supporting me directly by going to cryptoversity.com/podcast and sending me a Bitcoin tip to the address on that page. If you would like to support me without actually spending any money, then click on the Steam It logo and vote for this episode on the Steam network. That will get me some cryptocurrency without you having to spend a penny. If you're the kind of person that prefers something physical in exchange for your donation, then click on the store button on the main menu and that'll send you through to the Cryptoversity store, where you can buy yourself a t-shirt with the Cryptoversity branding on it. That kind of thing helps me out a lot. Or if you would like more structured information on Bitcoin, cryptocurrencies and blockchains, head over to the courses section and buy yourself an online course. That's all for today, guys. So until tomorrow and the next episode of the Cryptoverse, it's me, Chris Coney, saying bye for now.